Today I'm going to talk about swing trading and how you can swing trade properly, or how you can hold and manage your trades properly as a beginner. Rick FX here. Welcome back to my YouTube channel, guys. You know how we do it on this channel. It's value after value and content after content. If you are returning, you're welcome back. If you're new here, kindly smash the like button and also subscribe to this channel. Turn on post notifications so that anytime I post a video, you'll be one of the first people to watch it. And also, it's going to help this channel grow, right? Without wasting my time, let's get straight into today's video. So I have a couple of examples lined up on the chart where we're going to go into briefly Euro AUD, USD CAD, and also AUD CAD. But before we go there, let's talk a little bit about swing trading. If you are in my Telegram community, you see me send out different type of trades over the years. Some of them I hold for a longer period of time, some of them to also short-term trades or day trades, right? It's because I've been able to equip myself with these skills. I'm able to swing trade, I'm able to scalp, I'm able to day trade depending on the market conditions. So in this particular video, I'm going to show you some few tricks that you can be able to use to hold a trade for a long term, right? Holding trades is not magic, and also holding trade is not a guesswork. Aside the fact that there's psychological aspect to it, there are also signs and indicators that you should be able to see on the chart for you to be able to confidently hold certain positions or certain trades. Now, swing trading can be done on all time frames. Don't get me wrong, because some people attribute swing trading to higher time frames, right? The whole purpose of swing trading is holding a trade over a longer period of time, usually more than a day, right? So once you're able to take a trade and hold it for more than a day, you are swing trading. So this entry can come from the lower time frame or it can come from the higher time frame. But for the most part, the higher time frame is a better time frame for swing trading. That's why you find a lot of swing traders looking at the higher time frame, specifically the 4-hour time frame, right? Because the lower time frame has a lot of information. The higher time frame, like the daily or monthly time frame, is also too wide and also too far of a reach. Usually has bigger stop loss and also too much of a longer target where you've been in a trade for so long, right? So the H4 or the 4-hour time frame serves like a midpoint between the lower time frame and also the higher time frame. So that point is like the sweet spot where you find a lot of swing traders who are willing to hold their trades for a couple of days, right? Now there are two main things you want to consider if you want to swing a trade properly, right? That is market structure on the higher time frame, and also your risk element, or how much you are willing to risk per trade or per position, right? Now, why is market structure on the higher time frame important? So if you look at my charts carefully, right, this is Euro AUD. Euro AUD was in a downtrend up until this point where you had a triple bottom. We had a 0.1, 0.2 here and a 0.3 here. So this point right here was at market open, right? And this is where, during our last Sunday session with the mentees, I told them to watch out for a potential buy trade for Euro AUD. So usually when you get a direction on the 4-hour time frame, it can last you usually for the whole week or even more, right? The higher time frame gives you a longer term direction, and then the lower time frame gives you a short term direction. That is why it is suitable to use the higher time frame to swing trade. So if you look at this very carefully, I was expecting them to take a trade around this point for a buy. Put your stop loss just below the range, and then structure wise, what are you going to target? You're going to target these highs right here, simply because you know that for this change of trend to be successful, there's going to be some amount of reaction right here for a pullback, or maybe a complete reversal to even retest this point before price will finally find its way back up. So whatever the case is, you've already made some back here, and then you just have to repeat the process based on where price finds itself. If it is a temporary pullback, you can take advantage of the Fibonacci and find a continuation trade. If it's a complete reversal, you can just wait for price to get back to this level, and then you can look for a buy trade setup as well again. But this trade was taken on a Monday, and then as you can see, price has been rallying all the way down to today, Friday. So just like that, you've been able to peacefully hold a trade from Monday to Friday, making well over 140 pips by risking just 42 pips, giving you a risk to reward of 1:3. Solid risk to reward ratio, solid trade setup, easy peasy. So let's move on to our next example, which is AUD CAD. AUD CAD also came from a simple concept of a resistance, but this is just not any ordinary resistance, because if you go on a daily time frame, you can see that when price reacted from this level, it traveled all the way down for a very long time. So it makes that level a very good and opportune level. When you go back on the 4-hour time frame, which is obviously where we're going to get our entries, you can see that aside the fact that price had reacted around the resistance area, it ended up creating a double top on the 4-hour time frame again, giving us further confirmation for more sales to the downside. So you can just take your entry at the closure of this particular candle, giving you a bearish engulfing candle. Put your stop loss right above the range. I decided to put my stop loss all the way here because I just wanted to be completely safe of any manipulations. But if you put your stop loss right above this range, it is also totally fine. And then where are you targeting? Even though we are expecting price to overall find its way down here, there's always right to find probable zones in the market where you can take your short-term profits. First of them being this level here for your take profits 1, and then you can target this level here for your final take profit. This will give you a solid risk to reward ratio of about 1:3, almost 1:4, 1:3.6. So by risking just about 27 pips, which approximately is 30 pips, you can make about 100 pips. This is also another solid and viable setup that you can take advantage of as a beginner, right? You don't have to risk much, just know where your stop loss is supposed to be and then allow the market do its work. Our third and final example is USD CAD, and USD CAD comes from my trend line strategy. Once again, if you haven't watched my trend line video, make sure that at the end of this video you go on my channel and look for my trend line video and watch it into details. It's going to give you the key guides and rules that I use to draw my trend lines and also how I take my trend lines trades on the market, right? Let's get back to the chart. So if you look at USD CAD carefully here, you can clearly tell that I have my 0.1 here and then I have my 0.2 here. You can see price approaching 0.3. So what do? I just put my trend line in place and then expect or wait for reactions in that zone. Mind you, I don't take my trades blindly. I always wait for confirmations before I take my trade. So what do I have to do? I have to wait for the next 4-hour candle to close to see exactly what happened. So when the 4-hour candle closes, you can tell that, okay, we have a doji here, but it's still a bullish doji, and that indicates what? Bullish presence. There's still some bulls around that point, and we are looking to sell. So you going ahead to sell in this zone whilst you are still seeing some bullish presence in there is just plain sight you doing the wrong thing. So I need to wait for some more reaction. So wait for the next 4-hour candle, and I see that this candle closes right here. So as you have on our screens, it's our first bearish candle with a wick below it. So this is like not so much of a solid confirmation, because for the most part, if I'm looking to sell, I don't like to see wicks below the candle, and if I'm looking to buy as well, I don't like to see wicks above the candle, right? Because wicks represent rejection. But anyways, this can usually be your first entry, right? This can be your first entry, or you can wait for the subsequent candles to also close, giving you further or a much more safer entry. So in this case, let's wait for our next candle to see if we can get a much more solid confirmation, right? So with that being said, this is our next candle, which was a full body candle until a few minutes before closure. So this candle, even though it has a wick below it, is looking much more volatile than the previous candle. So over here, you can take your entry for a sell, your stop loss just above the range, giving you about 46 pips, approximately 50 pips stop loss, and then you can target these lows for your take profits, give you a nice risk to reward of 1:2.5, right? By risking 46 pips, you tend to make 115 pips if the trade goes into your favor. And just like that, let's see how this trade played out. Just like that, we had our next set of candles putting us into small profit and also small drawdowns, and then subsequently we have this candle taking us into massive profits. So at this point, your TP1 has been smashed. You are advised to take some partials off and put your stop loss to entry, making this trade a risk-free trade, and then waiting for the market to finally hit your take profit, right? So there you have it, guys. These are some of the simple guidelines that I use when I'm trying to hold a trade for a longer period of time. I hope you're able to learn 1 or 2 things, right? So if you enjoyed this video, like this video, subscribe to this channel, turn on post notifications, and also leave a comment in the description as well. Click on the link in my description to join the RickFX Telegram community. It's a free community where I share free trade signals ranging from swing trades, scalp trades, and also day trades. I also share other FOREX educational materials there as well. Don't forget to click on the link in my description to open an account in my recommended broker XNET. They have tight spreads, quick deposits, and quick withdrawals. Follow me on all social media platforms at RICK__FX, especially on Instagram and on Twitter. That'll be all for this video, guys. I'll see you in the next one. Peace out.